Hello, everyone. Welcome to today's live session. We're starting this a little bit later today because, of course, it's the first Friday of the month, which only means one thing. It's the non-farm payrolls. So the announcement is at 1:30. So we've got about 15 minutes. I'll keep an eye on the time till it happens. If you don't know what it is, I'm just gonna whiz through a bit about the non-farm payrolls, what the market is expecting today, and then we will have a look at the markets. It feels like it's been a bit of a quiet week this week, but we'll catch up with the usual markets: the euro, the pound, gold, oil, stock market indices, and of course, we'll have a look at Bitcoin as it's been moving this week. I should have the risk warning up while I'm doing this. So we do these live sessions three times a week. So we do them Monday, Wednesday, Friday. They normally start at 10 o'clock in the morning. If you can't make them, they are recorded, so they do go onto the website as soon as I've finished talking about the stuff that we're looking at. Just a quick one: if you're not familiar with our YouTube channel, we've put a bit of content on this week. So we've got we talked about the Bitcoin move this week, looking at levels for Bitcoin, and maybe more interestingly to a wider audience, I think a common question is, how much money do you need to start trading? So I recorded a video this week, and it's gone up on our channel, so you can view that on the Capital.com channel after this if you want to. If you just click on the Capital.com logo and then go to videos, you can see the latest one we uploaded was how much to start trading with. I think it's a common question, and basically it's all to do with risk. You don't necessarily need thousands of pounds to start trading, but if you do start trading with £150, you need to be able to trade with somebody where you can trade really small. But I expand a bit on it in that video, so that's there if you want to watch it afterwards. Right, let's get into it then. Let's get into today's thing. So it's the payrolls in 13 minutes time. So it's a major monthly economic release, usually announced on the first Friday of the month, which is today. It's US unemployment data, often used as a barometer for the health of the US economy. So it's basically how many jobs were added in the last month. And today's expectation, today's expectation is for plus 180,000 jobs added to the US economy in March, that should say. I edited the number, I forgot to add the month. So we're expecting 180,000 jobs, I think, to be added last time around. But I did see on Twitter earlier today that the estimates were quite wide. I think it's quite a wide band of estimates. But plus 180,000, that is the number to keep in our heads today. So let's see. This is what it's looked like recently. It's interesting. Look at last month. So last time around, massive miss. Last time the market was expecting 180,000 jobs to have been added, and in the end, we got 20,000 jobs were added last time around. So that was a real surprise last month. So let's see what today comes up with, and it's all about really how different is the actual number to what the market was expecting. That's why I'd say it's important to remember plus 180. Okay, that's the one we want to think about today. So and when it comes to trading it, I think it's really difficult to trade it. If you're trying to trade right off the number, you can often see, I say this every time, almost like a headless chicken reaction by the market, where let's say the number comes in weaker than expected, so suggesting that maybe the economy isn't quite as strong. Then normally you'd expect the US dollar to fall, for example, and maybe stock markets to be under a bit of pressure. But you can often see an odd knee-jerk reaction. So I think if you really want to trade on payrolls day, personally, I would be waiting for things to calm down. You know, give it, I don't know, half an hour at least to calm down. I'm coming in today. I'm long the S&P from yesterday, and I'm long the euro from yesterday morning, I think, as well. And I'll talk about that today. So I want stock markets to go up and the dollars go down, so the euro goes up. But we'll see what happens. But let's catch up on the week anyway. Let's do Bitcoin first of all. Crypto is back in the news, and here's the move. So I think it's a really interesting one. I did do a video on this earlier this week. I'm not a big fan of cryptos, to be perfectly honest with you. I think it's, I think there are much easier markets to trade out there, particularly since all the hype has gone from late, that we were in maybe 15 months ago. But this break by Bitcoin this week, and the other stuff has moved as well. Ethereum, Litecoin, all those sort of things have moved as well. But the break by Bitcoin is an interesting one, I think. We'd had this, looking at the price action, we'd had 4,200 to 4,400 had been a real problem. It moved as it ever does. It moved really quickly in a couple of hours. It moved 20%. It went. This is an hourly chart I've flipped over to. So the market went from 4,200 to 5,000 in a couple of hours. It has pushed higher since, pushed a bit higher a couple of days ago. But I think maybe it's waking up again. Maybe it's going to be an interesting year for Bitcoin now. I think as ever, I think for me, the test is going to be if it sells off from here, where do the buyers come back in? So we do have something of a recovery trend going on since those December lows. It has broken out of what looks like it's forming a base with 4,500 ish being a problem. So maybe Bitcoin gets a lot more interesting. Let's see. Someone's saying you might as well go to the casino than do Bitcoin. I mean, I think short term I do agree with you, but I think if we had that mania, if mania grips the cryptos like it did in the second half of 2018, it's going to be an interesting market, isn't it? If it starts doing that again, I don't think it will, but I think maybe we'll have more of a gradual, potentially a gradual recovery from here. So for me, it's more interesting if it sells off. But for a more in-depth look at Bitcoin, I did do this video earlier this week that you can see on the channel. So take a look at that. Let's take a look at these other markets. Now, pound against the dollar, I've given up, I think, like a lot of people, even paying attention to the news at the moment about Brexit. So I think there's talk about maybe a 1-year extension. Who knows? Who knows? But we are just seeing, I think, so it's been a bit of a choppy, directionless week for the pound. But still, I think we've got big support over the last couple of weeks, around about 129.50 through to 130. We've talked about this level a lot, haven't we? With it drifting down this morning, I saw this morning it had a little bit of a cheeky look below last night's low, pound US dollar. Arguably an argument to think about being a buyer maybe down here. We've got a bit of bullish divergence on the hourly RSI building up. We've got support from earlier in the week, 2nd of April, around about 130.10, 130.15. Whenever it starts nudging down to the low 130s, it starts to look interesting because this has been such a floor, but clearly it's a bit of a weird market at the moment because of all the Brexit talk, and who knows what's happening. It sort of flips around every day, but 129.50 to 130 has been something of a floor for pound against the dollar. I think the euro is more interesting. Like I said, I'm long the euro from pretty much about here, to be honest, 112.30, that sort of area. And because on the dailies, we'd had that move. We had the low for the year for the euro is around about 111.75. It moved off this level in March up to 114.50. We've sold off, and over the last couple of days, these old lows have held. It's a big level. I think down here, 111.75. We saw a bit of a turnaround on, what day is that? Wednesday. Sold off a bit yesterday and a bit sort of just quiet today, as you'd expect ahead of the payrolls. But I think it's maybe an interesting one, euro dollar, because 111.75 has been something of a floor. I bought it. My stop loss is the other side of 111.75 just to see if these lows hold. I think if you look on the hourlies, there we go. Arguably, this downtrend that it had been in, I need to get a bit of a move on because time's ticking on. This downtrend that it had been in, it has sort of had a go at breaking out of it. So my view now, or my hope now, is we're going to build something of a recovery, maybe going into next week. Let's see what happens. But I think the fact it held above the lows for March, the lows for the year so far, it was also a 20-month low, I think, down here it's set. I think it's interesting, that we did see buyers come in for the euro ahead of that. Let's crack on a little bit. Let's look at oil. We have seen oil push higher, a little bit higher earlier this week. It's sold off a bit over the last couple of days. Nothing too drastic, but the fact that we have decisively, I think, punched through $60 is quite an important one. I think we were sort of messing around with that level for ages. So the move through 60 does suggest this recovery has still got legs. I think, you know. So for me, the better trade, if it happens, is if it pulls back below 60. We've got big support at 58. We were watching that 58 level for what feels like forever. I mean, it wasn't, but you can see for what, a good couple of weeks or so, whenever oil wasn't really going anywhere, but when it got knocked back to 58, towards the low 58s, the buyers would come back in, and since then it's really taken off. So I suppose, you know, there's arguably an aggressive trade down here. I wouldn't do it now, just ahead of the payrolls, but you know, the lows for April the 3rd, 2 days ago, were 61.92. The low yesterday was 61.92, same again. And the low so far today, 61.85. So we are seeing 62-ish holding. So I suppose if you really wanted to trade ahead of the payrolls, is arguably a buy in here with a stop loss somewhere the other side of there. But I think if we had a bit more of an unwinding next week back below 60, it could be interesting for a buying opportunity with stops below 58. Let's see what happens. Gold has been under some pressure. Still looking for the bouncing gold, really, but let me just flip over to the daily. I think the daily chart is the one to watch on gold. You know, I've been following this trend and buying into this trend on the way up at various points. I think for me the real big level, it's these lows for the year that I've mentioned quite a bit. 12.75, the lows for January from gold, before it pushed up to 13.45. It came back to it in March. We had a bit of a move, $40 move off that. It's come back to it again. You can see yesterday spiking down to 12.80. So for me, I'm expecting this level to hold and this trend to continue. I suppose if you're a fan of the RSI, we do have a bit of bullish divergence again. And by bullish divergence, I mean where the market's pushed to a low, it's pushed a tiny bit lower there, but the RSI is making higher lows. So I don't sort of religiously stick to the idea of overbought, oversold, but I do like these divergence patterns when they form. You know, when the price is doing one thing, but the RSI is doing something else, it can be a sign that maybe the weakness in this example is running out of steam. And let's take a look at the US market. So I said I was long the S&Ps. I think it's a nice trade on the S&P yesterday because it came down to the lows from the day before. We've got 2 minutes and then we'll flip over to split properly. So we have seen, so this is the S&P 500, the broader US market. We have seen it scrape its way a bit higher this week out to fresh highs, fresh recovery highs. And the reason I think it was a nice little setup yesterday. Where was the move? What was the date yesterday? The 4th. Okay, so here was the move. So that was the low yesterday, about 5:30 to 6 o'clock yesterday, coming back to the lows from the day before. So a really nice place to set the stop. The lows from the day before were about 28.66. The S&P traded down to 28.68, and then bang, up it went. So let's see what happens. Let's bring the Dow up. We'll watch the Dow going into today. Then I'll have a look at some of the markets that people have asked about. But we'll watch the reaction. How are we doing for time? We've got a minute left. So let's watch the Dow coming into today. We'll flip it over to a 1 minute chart to get the full drama. Let me add to charts and let me add the euro against the dollar in as well. We'll add that to charts and then we'll put oil. So we'll try and watch all three of these. Here we go. So we've got our tabs up here. So there's the Dow, 26,400-ish. Euro against the dollar, a 1 minute chart on that, already getting a bit spiky. And US crude oil, $62. And let me just drag this over. So I think Twitter's a really good source for this sort of thing, you know, because they do actually tweet out the numbers as well. The US, I can't remember what they're called, the Employment Bureau, whatever it is, they do tweet out the numbers. And this screen here, you can see this is TweetDeck. So it's like a scrolling version of Twitter. So it should update in pretty much real time. So we've got about 10 seconds to go. So plus 180 is the number expected. Let's leave it on the Dow. Let's drag that back over and we'll see. Okay, here we go. Okay, the Dow's jumped about 10 points or so on that number. My TweetDeck has decided not to update. Oh, hang on, here we go. 196 I saw then. Here we go. So there's the BLS. That's the official US labor statistics, people. So 196,000. Look at the Dow. The Dow likes that, doesn't it? So 196,000 jobs added plus 180 was the expectation. The unemployment rate remains at 3.8%. So the Dow jumped about 50 points, I suppose, on that news, isn't it? Let's see, where does that put us? Let's just take this out to a 5-minute chart. Wow, it puts us well above yesterday's high. Does this put us on new highs for the year? Yeah, here we go. So that's the Dow. It made new highs for the year yesterday. That'd be good for the S&P then. It's good for my S&P trade. Okay, so that's new highs for the year for the Dow. The euro, okay. Again, this is this headless chicken move I talk about. We saw this surge up on the euro. So the euro was about 112.30, jumped about 15, 20 points, and it's come right back again. So euro, US dollar, not quite sure what to make of it. So that initial move is logical because the number was strong-ish, so that it suggests the economy is strong. If the economy is strong, maybe we'll see the central bank raise rates. If the central bank raise rates, actually that move doesn't make sense. It's good for the dollar. You'd expect the dollar to go up. So actually, we would have expected a bit of euro weakness on here. Maybe we just end up chopping around. Okay, maybe the stock market likes it more than the FX markets. But again, you've seen already, we're seeing this Dow coming back about 25 points off this level. Let's see. And finally, crude oil. What does crude oil think about it? Couldn't give a monkeys. Oh, crude oil's moved a bit higher, but nothing. So I'd suggest these are the markets to watch this afternoon. I'd say, that still looks pretty bullish, the Dow. I mean, these stock markets are bullish anyway. We've had rising markets all this year. Euro dollar, for me, I said I'm long because I think that maybe this downtrend's over. But you can see, I think there's very little point in trying to trade right over the payrolls because it can all go a little bit crazy. Okay, so that's that. Let's have a look at some of the questions that have come in. Then maybe we'll jump back onto these markets. Have a quick look. Did gold do anything on this? Let's have a quick look at gold, and then we'll have a look. What's gold done? Gold's jumped up a little bit. There you go. There's a little bit of a move in gold. So it was where was it? It was about 12.89. It's jumped maybe $1. The price of gold. Let's see. Facebook and Palladium. We did that. I've still got that trade running on Palladium. We did it last week, didn't it? And I think it did move into profit, and it's running at a loss at the moment. But let's take a look at Palladium first of all. We'd had that massive trend in Palladium. I just need to answer a message. Someone's just trying to send me a message for work stuff. Oh, just reply to that. So Palladium, the chart of Palladium. So we had that massive trend in Palladium. Oh dear, that's not looking good, is it? So we had this trend that had carried on from August last year. It got hit really heavily last week. We've seen on talk that it was a bubble. I think that was one of the things that hit the price. The market had rallied a bit since then. I think I bought in somewhere here on the webinar about a week ago. I don't know. It's moved a bit higher. The fact it's slipping below these lows, that's a little bit concerning. I think we're almost in the last chance saloon. I think for that trade now, it's I think this 1300 level is a big one. I'm guessing my stop loss was somewhere the other side. Yeah, 1290. So the stop on the trade is at 1290. I think if it starts pushing much below 1300, the risk is we're going to have at least another leg lower. So I think there's an aggressive trade here. If you thought 1300 is going to hold, then I think we've had the test today and want to be a buyer with the stop loss the other side. Let's come back to it next week and see what happens. And Facebook, someone said to have a look at Facebook. I've not looked at Facebook for a while, I don't think, on here. Let's take a look. Take a look at the Facebook shares. Well, that chart looks pretty positive, doesn't it? Let's take it back. It's really interesting, isn't it? I mean, it's really gappy on results, isn't it? I think when we get earnings from Facebook, it gets really gappy. We had this great trend for years, going back to down here for years and years and years. Broke out of that trend, and it's worked really well from just a simple trend line point of view, almost, doesn't it? If I could draw it in the right place, if we were going to look at something like that, that was arguably the trend for Facebook, which worked incredibly well from August last year down to early this year, broken out the trend, gaps up on earnings, little bit sideways, lots of support at 160, and just over the last couple of days we've started breaking out So I think maybe we need to be a bit patient and see what today brings. But it's starting to look like a valid breakout, isn't it? So I think so. Again, the expectation would be for a move higher from here. And I suppose the target, my first target, would be a run back to these August the 7th highs, about 190. So the only question, as ever, is where does your stop loss go? If we're just starting to break out, where does your stop loss go? I mean, probably the closest I would want it. You could there's an argument for putting it under this 172 low, but arguably, I think maybe a better one is this low from April the 2nd. So the other side of what 170, something like that. But it's an interesting one, Facebook, and maybe the more patient trade is to wait to see what happens today. Does it actually follow through with that breakout and look at it with fresh eyes on Monday? MTG, someone's asked. So what's MTG? I don't know what MTG is. Do you mean that one, Modern Times Group? I don't know. Is that the wrong one, or is there something else? If you can put the actual thing in, that'd help. Do we have New York cotton? Let's have a look at New York cotton. So I'll whiz through these questions, then we'll have a last look at the markets. Then we'll wrap things up. New York. Let's try putting cotton in. Cotton at number 2 spot. Right, I've never looked at a chart, or not for years and years anyway, of cotton. Let's take a look at cotton. What do we think? It's interesting, isn't it? That is interesting. Good trendy market, cotton. So we had the run from October 2017 from what 66 up to 95 by June 2018. So a 30% move. And then some quite the correction. Let's pick up again. I'm a big fan of just looking at simple price action. So we've had a good correction or a downtrend, whatever you want to call it. From there, great move all the way back to 70. And again, we have seen a breakout of that trend. So if it was me, I would be a buyer of cotton, I think, here. And the only question, as ever, where's your stop loss go? What's the tightest you want your stop loss? Me, if I was a buyer now, I would want my stop loss the other side of 74. This low, this low here. There's a bit of bearish divergence on the RSI, so arguably it's looking maybe a little bit overstretched in the short term. So maybe we'll get a better buying opportunity, but it definitely looks like it's broken the back of that trend, isn't it? So quite a lot of support. This is the hourly chart I've just flipped over to. Quite a lot of support ahead of 74. Maybe the more patient amongst us would wait to see if we do get a correction from here and a chance to buy in. Let's see what happens. But I think that's interesting. That one, well spotted. You're good at spotting these, Nick, aren't you? These trend reversals. So it's a good break of that trend there. Do you think Tesla's worth buying again? I think we did sent a message out from the app yesterday because Tesla fell about 8% on the open, wasn't it? And when it finished down as well, let's have a look at it. So I think it opened about 8% lower. I think on news that deliveries are slowing down, aren't they? I think it said. I think if you really wanted to buy Tesla, and clearly this isn't financial advice, down here it looks interesting, because it has been pretty much sideways for the last couple of years now. But 240 to 260 has been a real base for Tesla, isn't it? So it got knocked yesterday. So for me, that's the aggressive trade. The aggressive trade is to be a buyer. Because we have seen clearly the market has seen value in Tesla down around about 260, doesn't like it at 380. The sellers come back in. We've got a really clearly defined trading range. So I think it's interesting down here. So again, I mean, is it something I would do? I think arguably it is a trade down here. I think there's a couple of ways of playing it. You could either buy it and just put a stop loss underneath yesterday's low. So a stop loss below wherever it is, 259.90 looks like yesterday's low, or a stop loss underneath the low from March 25th, which is 254, or a much wider stop loss the other side of 240. So I think it's interesting down here. When we've always seen it snap back from these sort of levels. So let's see. I think if we see Tesla start losing 240, the risk is for a much deeper sell-off. But for now, I would assume, okay, that level's going to hold. So let's see what happens. Sterling yen, someone's asking for. Let's have a quick look at sterling yen. GPP, JPY, British pound yen. So I remember on the daily charts, 150 is a big problem from when we've looked at that in the past. So that's still the case. It's been a bit of an unexciting week, really. I think because the pound has been so choppy because of all the Brexit talk. I don't know. Arguably, you could be a buyer here. Arguably, you could be looking to see if the pound snaps back against the yen. Right, we have had something of a recovery from the end of March, going from 144 up to 147. Makes a low. It hasn't swung higher, but if I was really, and I don't trade it, but 145.70. I think from these lows, 144.90 through to 145.70. Maybe let's come back to it on Monday. If it pulls back into this zone and we see it hook back up, maybe it looks like a buying opportunity. S&P 500 we did, but we'll just these US markets, they're still strong. There's the S&P. Again, we've got how long? 45 minutes till the market opens. Again, it is out to fresh recovery highs for the year. You've just got to be a buyer of dips in these US stock markets. They're just incredibly strong. They just keep going up. At some point, it's going to stop, but at the moment, it's not showing any signs of stopping. DAX through 12,000. What does that look like? The DAX. So it did actually go above 12,000 yesterday, but pushing through 12,000 now. And the FTSE 100, I'm guessing the FTSE is going to be up as well because everything's up. FTSE's up 0.5% today. Let's have a look at that. So the FTSE is making fresh highs for the year as well. By the looks of it, it's all going up. There we go. So these trends are still up. So I think in stock markets, like that setup yesterday I talked about right at the beginning on the S&P, where it came back to almost the low of the day before. Look at that trend on the FTSE, still chugging away. Support left 73.70, 7,400 from the early hours this morning. It looks like stock markets are going to have a really strong finish to the week. Okay, so Modern Times Group, that was the MTG you went. Okay, thanks for that. Let's have a look at that. Modern Times Group, no idea who they are, but let's have a look. What's the chart look like? Oh dear. What happened there then? What happened there? Absolutely halved. I'm guessing that's a profit warning, isn't it? Is it a profit warning? I think the problem is, when stuff like that happens and you see a share that has more than halved, let me have a quick look on the news. I've got no idea. I can't see any news there. I would stay away. For me, you get a fall like that, and very often, clearly something happened back here as well. The first bit of bad news is rarely the only bit of bad news. I suppose if you wanted to be really aggressive, again, I've got no idea what's happened here, so I would take it with a pinch of salt. If you want to be really aggressive, you could say, okay, the move's been overdone. You want to be a buyer and put a stop loss under whatever that recent low has been, 110. But clearly, something major's happened there. I'm not sure what it is. Are you happy to be long gold even with the US dollar? Yes, I am actually. Yeah, it's a good question. I'm long gold. I've got longer term stuff on gold, the pound, and the dollar, and that long dollar is actually goes against being long gold and long the pound. And maybe if gold starts breaking down from here, where's the dollar index? If gold starts breaking down from here, I will probably get out of my gold longs, and this is the dollar index. So this is interesting. This is DXY on our platform. I think if the dollar index breaks above 98, it does look like we're going to see potentially another run of strength for the US dollar from here. Which would definitely put pressure on the gold price. So I think it could be make or break time for the gold and the dollar in the next couple of weeks or so. But I started buying this in June last year just because the market was going up. So let's see what happens. Let's see what happens next week on this one. But yeah, they are two conflicting positions. I think we'll wrap things up there. We'll have a quick look at what's going on. So the Dow is still trading. So that was the move on the Dow. So we're set for a bullish afternoon at the moment for US markets. So 26,420 was where it was before the announcement. It's about 70 points higher. The euro, that does make sense that the euro has lost some ground there. We have seen the dollar come back because it should be bullish for the dollar, a strong number like that. And crude oil Crude oil, is this moved? Is it moved? Hang on a second, 1 minute chart. It's moved a bit higher, hasn't it? It's moved a little bit higher. So let's see. Let's see what the rest of the day brings. But I think for this afternoon, we definitely watch stock markets, because we look set for a really strong start, and see if this. I mean, the euro, struggles to hold on to rallies, but let's see what happens if we see. Maybe next week is more interesting if we see the euro strength continue. That's it. We will wrap things up there. Thanks for coming along as usual. We'll do this all again on Monday. So Monday at 10 o'clock in the morning is when we'll do the next live session. So to never miss out, just click on the subscribe button thing down there, and the alarm bell means you get a push off YouTube whenever we go live. Don't forget, if you're new to trading, just to plug our YouTube channel again. There's that. How much money do you need to trade forex? And I think the answer, a lot of people won't like it, because this whole idea that you start trading foreign exchange and before you know it, in 5 weeks' time, you're driving around in a gold Lamborghini. It gets somewhat dispelled by this video here. But I think if you want to have a sensible approach to risk and how much money you need to trade, have a look at that video. How much money do you need to trade forex? And that's on our YouTube channel. Okay, but we will wrap things up there. So it's been interesting, I think, today. This the payrolls announcement come in pretty much as expected. Strong start for stock markets this afternoon. Let's see if we can hang on to it, and we'll wrap it up there. Have a good weekend, and hopefully see you on Monday. Thanks very much.